Howdy and welcome to Liberty Call for today. Was this Tuesday, January 18th, 2025. Hope you're having a fantastical day out there in the interwebs. Another nice day here in Colorado. It's up in like the mid 40s. So it is balmy outside. So, all right. Well, tech stocks are bouncing back after China's DeepSeek AI shook the industry, while treasury yields are climbing as markets stabilize ahead of the Fed's meeting. Over in the UK, thousands of businesses are facing financial distress following tax and wage hikes. Meanwhile, HSBC is shutting down its M&A and equity capital markets operations in the West to focus on Asia. And General Motors posted strong revenue despite a $3 billion net loss. Let's dive in and let's make it all make sense. But before we do, if you could give me some thumbs up, a like, share, subscribe, and follow, and press that notification bell. All righty, well, let's hop into the markets first. Dow Jones was up 0.31%, 136 points. Closed at 44,850. S&P 500 up 0.92%, 55 points, closed at 6067. NASDAQ up 2.03%, 391 points, closed at 19,733. The VIX fell 8.27% today. It's at 1642. Canada up 0.52, Brazil down 0.65, and Mexico down 0.18. In Europe, Germany was up 0.74, the UK up 0.35, France down 0.12, the Netherlands up 0.4, Spain up 1.31, Italy down 0.12, Switzerland up 0.44, and Portugal up 0.37. Russian exchange is green today. MOEX up 1.42, RTSI up 0.56. And the overnight markets, the Nikkei in Japan was down 1.43, Australia down 0.12, New Zealand up 0.29. In China, the Shanghai was down. Actually, these are all closed, so I'll just skip those. The Hang Seng was open. It was up 0.14, and that was it. All right, so skip most of. It's probably Chinese New Year or Lunar New Year or whatever it is. I'm not to be condescending or rude. I just don't know what it is. So, all righty. Well, let's hop into the market recap. See what happened today. S&P 500 rebounds as dip buyers pile into tech following the rout. Fed meeting is eyed. They are meeting today and tomorrow. All right. The S&P 500 rebounded on Tuesday, driven by a recovery in tech stocks after Monday's sell-off, which was triggered by fears of competition from Chinese AI startup DeepSeek. NVIDIA and other AI-linked stocks recovered after Wall Street's analysts downplayed DeepSeek's competitive threat. Macquarie noted that cheaper AI solutions could promote wider adoption and reduce costs for users, potentially benefiting the broader AI ecosystem. The recovery comes amid a big earnings week for tech giants like Microsoft, Meta, Apple, and Tesla. In corporate earnings news, General Motors, the automaker fell 9% after reporting a fourth quarter loss due to large charges related to its operations in China. JetBlue Airways plunged 27% following a significant quarterly loss and weak revenue guidance. Royal Caribbean, the cruise operator, rose 6%, buoyed by better than expected earnings and an optimistic outlook for this year. And Boeing shares surged 12% as the company unveiled a turnaround plan despite posting its largest annual loss since 2020 due to prolonged labor strikes and U.S. government project costs. Investor attention now shifts to the Federal Reserve's two-day policy meeting, where rates are expected to remain unchanged at 4.25 to 4.5. Additionally, key economic data, including the Fed's preferred inflation gauge, the PCE price index, and fourth quarter GDP estimates are also due this week. Housing market data released Tuesday showed single-family home prices rose 0.3% in November, marking a moderate 4.2% annual increase as higher mortgage rates continue to weigh on demand. With tech earnings, economic reports, and Fed decisions in focus, the market braces for further developments. All right, so that's everything in the market recap. Let's hop into some data. The December durable goods report came out. This is First Trust's report put together by Andrew Opdyke. All right, new orders for durable goods fell 3.9% year over year in December, marking the fourth decline in 5 months. The 5.6% drop for the month was primarily driven by a sharp 45.7% plunge in volatile commercial aircraft orders. Excluding transportation, durable goods orders rose 0.3%, supported by gains in fabricated metal products up 1.2%, electrical equipment up 0.3%, machinery up 0.2%, and computers and electronic products up 0.1%. However, orders for primary metals dipped 0.6%. A key highlight in the report was the growth in core shipments, which rose 0.6% in December, following gains of 0.4% in October and November. Core shipments, a critical component of business investment in GDP calculations, expanded at a 3% annualized rate in Q4 compared to Q3, signaling a recovery after declines in the second and third quarters. Despite these gains, durable goods orders overall have not kept up pace with inflation over the past year. With the Trump administration returning to office and focusing on cutting taxes, regulations, and government spending, volatility in durable goods data may persist as businesses adjust to the evolving policy landscape. This could influence the Federal Reserve's approach to inflation and monetary policy. In housing, the Case-Shiller index showed a 0.4% increase in November and a 3.8% year-over-year gain, while the FHFA index rose 0.3% for the month and 4.2% year-over-year. These moderate gains reflect stability in the housing market, even as higher mortgage rates weigh on affordability. As the U.S. navigates economic policy changes and seeks sustainable growth path, challenges and opportunities lie ahead, with potential short-term pain preceding long-term progress. Yeah, I think there's going to be a lot of pain, quite honestly. But, it's kind of like Andy Dufresne when he escaped from Shawshank. He had to crawl through that pipe full of poop. And I think we're going to have to do the same thing. All right. Last up from Zero Hedge, court battle imminent as Trump's White House pauses federal grants and loans. Boy, people are mad about this on the interwebs. One of my senators, Mr. Michael Bennett, had a post whining and moaning about how it's going to cut state it's going to be a detriment to state services here in Colorado, which my reply was federal dollars are not intended for state projects and state services. So, yeah, many of my fellow lefties in Colorado did not like that. So I had to be quite snarky with them in my retorts. All right, well, let's read through this, read through my summary and see what happened. All right. The Office of Management and Budget, the OMB, issued a directive on January 27th requiring federal agencies to temporarily suspend grants, loans, and financial assistance programs to align them with President Donald Trump's executive orders. Acting OMB Director Matthew Vaith's memorandum mandates a comprehensive review of federal programs, particularly those related to foreign aid, non-governmental organizations. That's where a lot of our money gets wasted, because a lot of these like Catholic charities and things like that, you think they're religious groups. They're not. They're basically NGOs that are set up to take federal dollars and help the importation of, they call them migrants and other services. These are the same kind of businesses that go over to like Pakistan and teach, diversity training to, blind lesbians. So, I mean, it's a graft, it's grift, it's just, taking advantage of the American people. Diversity, equity, inclusion, DEI, woke gender ideology, and environmental initiatives like the Green New Deal. Another boondoggle. The suspension, effective today, January 28th, aims to ensure programs adhere to Trump's policy priorities. Agencies must provide detailed reports on affected programs by February 10th, including legally mandated actions or deadlines that arise during the review. Exceptions for federal awards may be granted on a case-by-case basis. Democratic lawmakers, including Rosa DeLauro and Patty Murray, criticized the pause, calling it breathtaking and unprecedented. Not true. It's happened many times. I think Nixon, I think the first person to do this was Thomas Jefferson. And this was a big stink back then because his attitude was, well, we don't need to spend the money right now. Let's just leave it in the treasury. And, if something else comes up, we could use it for that. And, oh, my God, especially today, people freak out. Well, we can't spend the money on what we intended it for. It was a wasted process in the first place. Come on, people. They argue it could disrupt financial assistance to states and communities. Again, that money is not intended for the states, jeopardizing financial security and federal obligations. Well, federal obligations are different from state obligations. Senator Minority Leader Chuck Schumer labeled the directive as lawlessness and chaos. Really? Really? Lawlessness and chaos. I'm looking outside. I don't see any chaos. Looks the same as it did yesterday. All right. And legal challenges are anticipated. New York's Attorney General Letitia James, she's a real winner, announced plans to block the directive in federal court. Well, with her big butt, she could block a lot. The suspension follows Trump's Inauguration Day executive orders, which reversed 78 of Biden's policies, including those promoting DEI. Trump pledged to establish a merit-based colorblind government and declared official recognition of only two genders, male and female. The review process may spark significant legal and political battles while reshaping federal funding priorities. Yeah. All right. Well, that's everything they had to cover for today. I hope I haven't made everybody mad. Because, whether or not you're a government employee or a lefty or whatever, so I apologize. I feel terrible. It's my libertarian views. Just they get away from me. So, all right. Well, if anyone needs anything from me, not that anyone's still watching, please go to DSA Financial Group. You can get all your financial planning needs addressed there. So please do. All right. Well, hope everyone has a wonderful evening, and I'll talk to everyone again next time.